Hi there traders, this is Steve Miley for FX Explained, and here we're going to take a look at a regular Forex Zone, look at a journey around the FX markets as we take a look at what's impacting right now the major currency pairs: Euro dollar, pound dollar, dollar CAD, Aussie dollar, New Zealand dollar and the US dollar versus Japanese yen. And we're going to look at day trade outlooks for these currencies going into Friday. Remember, US employment report today, so potentially some volatility. Basically, the main theme in here over the last two sessions since Wednesday evening, since the Fed meeting, when the Fed cut rates, and they kind of though indicated they're probably going to be a little bit more hawkish, but the market's still reacting with US dollar weakness after that rate cut. So we said that's been the broad theme since Wednesday evening's Fed rate cut in here, and so the market's certainly reacting that way. Most currencies stronger versus the US dollar since that period. So in here we're seeing euro rallying against the dollar, back up very close to this previous mid-October peak at 111.83, getting up to like the 111.76 level. Slight dip lower yesterday, but we're seeing still upside pressures very much intact, and real threat for a push up through 111.76, 111.83, and then this level over here at 111.91, potentially looking for then higher targets up here at 112.29, 112.50. Only down through 111.30 would see a more negative shift. Let's turn to the pound versus the dollar. A strong recovery effort, having had this dip from the latter part of October in here, from about mid to latter part of October, and then over the past week though a recovery effort primarily being driven by that US dollar weakness, but also some positivity coming also from the pound, and that leaves real risk for a challenge back up to 130.13 and potentially higher going into the US employment report today, maybe up towards 130.47. Only through 128.99 sees a more negative shift. US dollar, Canadian dollar, a spike higher on Wednesday. This was not from the Fed. This was from the Canadian dollar after the Bank of Canada meeting, where they indicated potential for a rate cut, a more dovish tone, a weakening of the Canadian dollar, seeing dollar CAD spike higher. Not on the Fed. This was on the BOC, the Bank of Canada. And that leaves upside risk very much intact, aiming back higher in here for us towards 132.08, maybe as high as this key 132.40 level. Only below 131.33 signals a more negative tone. Aussie and Kiwi both positive in here since the Fed. A strong rally up through some key resistances: 68.83, 68.95, up to 69.29. Looking for further upside, a dip and a rebound in the last 12 to 24 hours, and that leaves upside pressures towards 69.29, and then higher targets through here: 69.10, 69.29, maybe as high as over here at 69.55 for today. And similar story for the New Zealand dollar: a setback, but then a strong rebound post-Fed, up to 64.42. Upside risk for the New Zealand dollar up to 64.51 here, and then maybe as high as 64.99. Finally, we're going to end up with dollar yen, and dollar yen plunging lower since the Fed. We did have a spike higher to 109.29, fading just ahead of this key 109.32 level from the beginning of August. A sell-off since then, down through multiple supports including 108.02, just holding at this trend line at 107.87. Risk going into the employment report today, maybe to this critical 107.33 level in here. So downside threats very much intact for dollar yen. So overall, a more negative outlook for the dollar in here as we go into today's US employment report. This has been Steve Miley, the market chartist, on behalf of FX Explained, and I'm going to wish you a great trading day. So traders, don't forget to catch us again on the Forex Zone, and also check out all the great content on fxexplained.co.uk.